Hello traders, Gary Wagner here just after 10 o'clock in Honolulu, 4 o'clock in New York. It is Thursday, 8th day of October, 2015, and this is the daily report for gold and silver. Fascinating day in the market. Of course, we do have gold trading lower on the day, currently off about $4 or $5, trading at $11.40, $11.39 and change. We did put out recommendations to enter long gold positions as well as long palladium positions. We'll cover those two trades in detail. Also, stop placement rationale for stop placement. We also sent out, when we sent out our trade alerts for trending markets along with the gold forecast to gold forecast subscribers. We've had a tough enough year, and I felt that those were some dynamic trades. Hopefully some of you took advantage of that. Trending markets will be available for you to view. Simply click on the tab above the video. So traders, as I have said, most interesting activity in the marketplace today. Minutes were released from the most recent FOMC meeting, and what has really come out of that is nothing new, nothing that we haven't talked about, and that is it's highly unlikely that we will see any kind of interest raise hike by the Federal Reserve, definitely this year and probably into March or so of next year. Now, it was simply a matter of when and how we would position ourselves in this market, and I kind of have been waiting for a little dip in the market. Of course, we had this dynamic move when we saw this market trade just bounce off of really 1100 to close above 1134, and that was a pretty key level. From there, it went up and it absolutely found resistance roughly at 53. So we were looking for the market to come down at this point, and my sense was with the minutes being released, we absolutely want to begin to scale in positions. And what I mean by that is that certain benchmarks will look to add to these positions. Now, traders that took that call, we are long roughly at 44. Our stop is just below 1121. And I wanted to define why I put the stop where I did. First of all, I'm looking at this as a long-term trade. I absolutely believe that we hit a bottom this back in the beginning of August when the market touched and traded to a low of about 1071. I think that we built a solid base there. We've come off of this resistance area, but I also believe that we are destined in gold prices to go and challenge these highs up at around 1170. In fact, for any bullish model to hold weight, it really necessitates that we get a higher high at this point when we consider that we have now had higher lows without getting those higher highs, and we certainly haven't gotten them on these last two rallies. Bullish model doesn't work. We're into a compression sort of pattern. In other words, we've got a narrowing of range, and I don't think that's what we're going to see. So we took a position on at 44. Rationale behind putting our stop below 21 was that we have a pretty critical level. It's a 61% retracement, and it is of the most recent move from the market trading, call it 1105, 1106, up to 1153. And then that's our 61% retracement, so at 23. So we certainly want to just keep it underneath this, because regardless of the volatility in the market, my sense is that we will go in and make a new high before we make a new low, but this will give us some protection nonetheless. Traders, we also made a recommendation to enter a long position in palladium. Palladium has just been on fire. We've been talking about it over the last couple of months. My sense right now is it gets closer and closer to price of platinum, and I find that that disparity is something that will continue to come together, to coalesce, so to speak. And I also believe that in an environment where we have very, very solid U.S. equity markets running, palladium is such a highly used industrial metal, we'll get a kick from that. Traders that took that call, we entered roughly at 705, 706 in that area. Stops are at 681. Again, my rationale for the stops at 681, this is 680. Let's go ahead and blow this chart up. But this is 680, and I'm trying to place our stops underneath these most recent lows that you see right in here. And you are going to get some wild swings with palladium. It makes no sense to put any kind of a tight stop in there. 50 ounces per contract, 681. The risk really isn't that grave. We're looking at about a $25 risk. And in terms of upside target, I genuinely believe that we can see palladium move back to probably 750 of the high 772 is what I would be looking at. But that is the basic strategy behind our palladium trade. We also talked about getting long in the Standard & Poor's as well as crude oil. For traders that want more information on that, go ahead and watch Trending Markets. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow on Friday for the weekly wrap-up and review. I am also compiling my end-year outlook 2015. That will be completed through the weekend, and I'll send you out a link as soon as that's available to view. Again, have a great day. Bye-bye.